Let's go now to CBS News business contributor Javier David. He's also a business editor for the Dallas Morning News. Take us through what we saw today in the markets and what this 2-week ceasefire now could mean.
Yeah, look, the most salient economic impact right now is energy spikes act as a consumption tax, and that's what you're seeing in the markets. Everyone wants this conflict to end because it is making inflation hit consumers even more anxious and miserable than they already are in this affordability crisis era we're living through. Coincidentally, I was just in South Florida. I borrowed my sister's car. I filled the gas tank up. What's usually a roughly $50 purchase ended up costing nearly $70. And it kind of just goes to show you how surging gas prices act as this kind of stealth tax on all sorts of goods and services up and down the economic supply chain. So when consumers get sticker shock that way on a daily or weekly basis, it just forces them to make all these sorts of trade-offs and just to be able to afford like the basics. So you have this crisis at the Hormuz. It's created the biggest energy shock in history. It's taken millions of barrels a day off the market. Just today, dated Brent, which is a benchmark for real oil prices, hit its highest ever above 144. So amidst all this talk about ceasefires, even if the strait reopens, energy prices are more than likely to remain high for months, if not years. And so also we know that about every dollar worth of move of oil translates into a move higher of at least 2 cents in gas prices. So you're sitting now above $4 per gallon in over 23 states. That could easily be 5, even though we have the ceasefire on the table.
Javier David, thank you as always.